Imagine paying the price of a luxury house for a single flower. Now imagine doing the same thing 400 years later. But this time, it's digital. Different centuries, different assets, same human mistake. Stay with me, because by the end of this video, you'll never look at markets the same way again. The year is 1637. The Netherlands is the richest country on earth. Tulips, exotic imports from the Ottoman Empire, are already popular among the elite. But then something strange happens. A virus creates rare color patterns in some tulips. And suddenly, flowers turn into investments. At the peak of the frenzy, a single tulip bulb sells for the equivalent of 15 years' salary. For a skilled worker, people stop trading flowers. They start trading promises. Bulbs change hands multiple times a day, without ever leaving the ground. Until one ordinary auction, where no buyers show up. Within weeks, prices collapse. The world's first financial bubble bursts. Lesson 1. When price is driven by excitement instead of usefulness, the fall is inevitable. France watches this and thinks, we can do this without flowers. After years of war, France is drowning in debt. Enter John Law, economist, visionary, and gambler. His idea? Create paper money backed by shares in a company that claims exclusive rights to exploit the vast Louisiana territory. Gold, land, endless wealth, all on paper. The shares explode in value. Paris becomes obsessed. People quit jobs just to trade stock. But when investors ask for real money instead of promises, the illusion collapses. But when investors ask for real money instead of promises, the illusion collapses. Shares crash nearly 97%. John Law flees the country in disguise. Lesson 2. A system built on belief collapses the moment belief disappears, and somehow decides to copy the idea. The South Sea Company promises massive profits from trade it doesn't actually control. Politicians promote it. Insiders get rich. Even Isaac Newton invests. Later, he famously says, I can calculate the motion of the stars, but not the madness of people. The stock collapses. Lesson 3. Intelligence doesn't protect you from greed. Fast forward to the 1840s. Railways are real. They are revolutionary. And that's exactly the problem. Investors assume that if a technology changes the world, every investment tied to it must succeed. Hundreds of railway companies are approved. Some tracks are planned straight through castles. When reality sets in, more than half of the projects are abandoned. Lesson 4. A great invention doesn't guarantee great investments. Now America in the 1920s. The economy is booming. Stocks are rising. People borrow money just to invest. Banks encourage it. In October 1929, the market breaks. But this time, the crash spreads beyond Wall Street. Banks fail. Jobs vanish. The global economy collapses. Lesson 5. When leverage meets panic, the damage multiplies. In the 1980s, Japan believes it has cracked the code. Stocks surge. Real estate prices explode. Property becomes collateral for loans, which are used to buy more assets, which secure even more loans. A perfect loop. When it breaks, Japan enters decades of stagnation. Lesson 6. Debt can inflate prosperity, but it deflates painfully. In the 1990s, Asian economies look unstoppable. Currencies are pegged. Foreign money flows in. When confidence fades, currencies collapse like dominoes. One country falls, then another, then another. Lesson 7. In a connected world, risk spreads faster than fear. The internet arrives. Companies don't need profits, just a website. Investors fear missing out. Money floods in. When reality hits, most companies disappear, but the internet survives. Lesson 8. The future can be real, even when the bubble isn't. In 2008, housing becomes the safe investment, until it isn't. A decade later, crypto promises freedom from the system, yet repeats the same mistakes. Leverage, speculation, blind faith, different technology, same psychology. For 400 years, the pattern never changes. A new opportunity, easy money, overconfidence, collapse. Markets evolve, assets change, human behavior doesn't. And that's why financial bubbles will always exist. If you want more stories that explain money, markets, and the psychology behind them, like the video, subscribe, and tell me in the comments, what do you think the next bubble will be?